Picture this: gold and silver sprint onto the stage wearing theme park crowns, the crowd goes wild, and Bitcoin, still nursing its bruises from October's crash, sits on a folding chair eating popcorn and saying, "I'll get my turn." Now imagine a company named Bitmine, ticker Bmnr, quietly loading up on Ethereum, staking huge chunks of it, and smiling like the nerd who just found out his side project prints money if markets ever come back to him. That's our headline. Metals roar, crypto naps, and Bitmine's playbook could make Bmnr one of the most intriguing and volatile tickers to watch. Macro setup, the October crash and the deleveraging event. Quick context: after a big deleveraging event on October 10th, the crypto market hasn't found a sustained bullish chorus. Traders who were long leveraged positions got squeezed out, many speculative flows dried up, and price action grew choppy. Bitcoin, once the bellwether that led the room, has decoupled somewhat from other risk assets, in this case, precious metals, which have gone on their own tear. If you've been watching your portfolio and wondering why crypto hasn't popped back, this is the macro fog you're standing in. Think of October as the storm. Some ships sank, others limped to port, and the Coast Guard, i.e., risk-off flows, is still talking on the radio. The weird world where gold hit $5,000 and silver $110. Yes, really. Okay, let's address the elephant wearing a crown of bars. Multiple outlets report that gold has surged past the $5,000 level per ounce. Reporting times vary by region and methodology, and silver has climbed toward $110. This isn't hyperbole from Twitter traders. It's a full-on precious metals rally that has sucked a lot of investor oxygen out of riskier assets, crypto included. Why does this matter? When institutional and retail capital rotate into real asset hedges like gold and silver, they reduce the pool of money chasing high-beta cryptocurrencies. Money is finite and sometimes greedy with its attention. Imagine a carnival with two attractions, a shiny new roller coaster, crypto, and a vintage golden carousel, gold. If a herd of people rush to the carousel because a celebrity said it's the next big thing, fewer people will be on the roller coaster, and the coaster operator, even if they've fixed the brakes, will feel the chill. By the way, if you are getting value from this video so far and want more like this, please like the video, it means much to us, and hit the subscribe button, and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. Bitcoin and Ethereum, the price ranges to care about. Right now the tape shows a split personality. Bitcoin, BTC, has retraced from earlier highs and was trading around the mid-$80K area in recent coverage, with downside support near $80,600 being a level traders watch if selling pressure continues. This is obviously well below BTC's all-time highs, but still a large nominal price when denominated in USD. Ethereum, ETH, has been range-bound, roughly between $2,800 and $3,200, retesting the lower bound after BTC's dip. That range has been the battleground since November. If ETH breaks materially below $2,800, the reaction could fuel further downside. Conversely, a lift above $3,200 would energize the bulls. BTC is pacing like a lion in a zoo enclosure. ETH is more like a tiger in the next cage. Both may roar, but their timing and triggers differ. Tom Lee's take: the metals move has sucked a lot of oxygen out of the room. Tom Lee, Fundstrat founder and head of research, now also heavily associated with Bitmine, has publicly argued that the recent precious metals rally is a main reason crypto hasn't marched higher. His line is crisp: when gold and silver surge, they attract FOMO capital that otherwise might flow into crypto. In his words, the metals move has sucked a lot of oxygen out of the room. When metals cool off, he expects that oxygen to leak back into the crypto greenhouse and prices to follow fundamentals upward. Put bluntly, investors love fads. Right now the shiny fad is gold and silver. When people stop crowding the vintage carousel, they'll eventually revisit the roller coaster. Bitmine's strategy: staking, treasury, and the ETH stash. Here's where the corporate action comes in. Bitmine, which trades under the ticker Bmnr for Bitmine Immersion Technologies in some jurisdictions, has been aggressively building a treasury of ETH and staking a large portion of it. Multiple reports indicate Bitmine's total ETH holdings are around plus 4 million ETH, and the firm has staked over half of that. Figures in different reports vary slightly by timing and conversion, but the scale is enormous. Recent coverage says the company bought an additional 20,000 ETH and staked 209,540 ETH, representing about $610 million at the time of reporting, pushing their staked ETH totals over 2.0 to 2.2 million ETH depending on the source and timing. Why stake? Staking ETH generates a yield, a relatively stable cash flow in a world where price can swing, in addition to helping secure the Ethereum network. For Bitmine, staking a huge fraction of their holdings is a play to both earn protocol rewards and to signal conviction, telling the market, we're here for the long haul. Bitmine is acting like a wine producer who bought a mountain of grapes and decided to barrel age them. You can sell the grapes now for juice money, or you can bottle the vintage and earn a fancy label later. Staking is the barrel. The math. Why staking 2+ million ETH matters. Some quick arithmetic to make the scale sink in. If a firm controls 2.2 million ETH and ETH is trading near $3,000, that's roughly $6.6 billion in staked assets. The annualized staking rewards, even at a single-digit percentage rate, translate to hundreds of millions per year in protocol rewards alone. For example, at a 3% staking yield, 2.2 million ETH yields 66K ETH/year, which at $3,000 per ETH would be nearly $200 million annually. That's meaningful recurring income that sits on top of any capital gains if ETH appreciates. This is why Bitmine's balance sheet moves are more than headline fodder. The staking yield plus the optional upside if ETH recovers are the core of the treasury play that could hit Bitmine's $7,000 in coming years possibly. Note this as well. God tells us in Daniel 7 verses 25 to 27 that, "And he shall speak great words against the Most High, and shall wear out the saints of the Most High, and think to change times and laws, and they shall be given into his hand until a time and times and the dividing of time. But the judgment shall sit, and they shall take away his dominion, to consume and to destroy it unto the end. And the kingdom and dominion, and the greatness of the kingdom under the whole heaven, shall be given to the people of the saints of the Most High, whose kingdom is an everlasting kingdom, and all dominions shall serve and obey him." Want more information about the books of prophecy? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: "I stayed until the end." Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe, and then turn on the notifications bell. If you do this, you greatly encourage us to continue bringing to you more insightful videos. Do not miss out on our future videos. All I am asking is your subscription. Thank you for joining me today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel, and share your thoughts about today's video. Wish you God's love.